Good day, folks, and welcome to Best Trade Setup. In this video, we'll be going through the trades from the 16th of February 2024. First up is this Euro USD trade, and as usual, I go through the before and after, followed by analysis of the trade. Stop loss taken out. Now, with this trade, I failed to recognize the price had confirmed buys. So when I analyzed sells, I had taken into consideration price action that had confirmed buys. As you can see, this vertical red line here indicates that sells are confirmed. And every single candlestick before that, I don't consider it making an analysis moving forward. So moving beyond this point, we have buys confirmed here, as you can see with these notes, fake out W pattern. And this fake out, if you look at it, on the line chart, you'll see multiple troughs. So this candlestick confirms buys, but since this is the no trade zone, I won't enter any buys. The optimal trade entry for buys was in this area where we have a good 1-to-1 risk to reward ratio. Looking at a bigger picture, we see that this is a peak formation low followed by a consolidation and this candlestick right here engulfing and breaking out of this whole consolidation area. This price action here confirms further moves to the upside. This is the wider picture of price action. Feel free to pause the video, go through the notes as I explain why this is a confirmed sell, why this one is, and why this orange line here confirms buys, but because it's in the no trade zone, I won't take any trades within this hour until afterwards, indicated by this blue line right here. Here's another trade on the Euro USD, the before and the after. If you remember, we had looked at this price action here, which confirmed possible moves to the upside. So the only thing that I'm looking for moving forward is further confirmations for the move upside, or if price action shows a change in the bias of price to the bullish side, then I'd have to restart the count and look for 5 to 6 confirmations. Whilst if there's no confirmations of sells from this point on forward, I'll just look for a W pattern or a 3 candle pattern at a significant level. Now, this is what I was looking at to enter this trade. In this case, I only need 5 confirmations, mainly because of this level above the order block. What we have is a fake out W pattern, and this fake out in the form of a W pattern when you look at it on the line chart, because the price goes down, up again. And it's reacting off of this 5-minute order block. There's also this 3 candle pattern, and now we have 5 confirmations for sells and the price action closing above this 20 EMA. Very important for price to close above the 20 EMA because that is the final confirmation of a trade entry. And then we have price going up, came back down, and then up again. As you can see, there are vertical lines here on the red indicating sells and this vertical blue line indicating buys. I'll tell you all about why these lines were put here in the next slide. What we have here is a confirmation for sells. These are the notes. As you can see here, it's a fake out from here to here, M pattern. Every fake out or sweep comes with an M pattern or W pattern, and the fake out in itself is an M pattern. These are the same things that I always state in my videos. If you go back, I use the same things on my confirmation list. It's just rinse and repeat in practice. So we have a fake out in the form of an M pattern, and the same thing also on the second leg. So we have valid sells, but the trade I won't take it mainly because the risk to reward is less than 1, because the first take profit will be here at the 5-minute order block. So given that these sells were confirmed, I now need a fresh 6 or 5 confirmations to enter buys. And since there's a level above this order block, just like here, I only need 5 confirmations. So we have the fake out in the form of a W pattern and a W pattern itself, rejecting off of this 5-minute order block and this engulfment right here. This vertical blue line indicates buys, but because we're in the no trade zone, I won't enter the trade. This is a 3CP at a significant level. This is because when you look at the big picture, price goes above this level, comes back down, and then closes above it to retest it and go up, sort of like a head and shoulders pattern. But since it's a no trade zone, I wouldn't advise any entries at this point in time. Last trade of the day on Euro USD is this one right here, which is a 1-to-1 before, and this is the after. Given all this price section here, feel free to go through the notes as I confirm why this was a sell and why this is a buy. So moving forward, I just need price action to give me at least a W pattern or three candle pattern at a significant level. What I see here is a peak formation low. This is a huge V pattern, and then a consolidation after the V pattern, the peak formation low. We have price breaking out of this consolidation and engulfing this whole consolidation, even though we're leading up to a resistance level. With this price action pattern, I'm more than comfortable in taking a trade to the upside, which will be a 1-to-1 where the stop loss is slightly below this consolidation area. Now, for the most part, I've been concentrating on gold, but recently I've been looking into Euro USD, trying to see if the same analysis that I use on gold can be used on Euro USD, and I've seen that it does work. So I'm gonna go through the chart for gold. I didn't take any trades mainly because most of the trades were on Euro USD. If I pick a pair, that's the pair I'm gonna stick with the whole day for the most part. So now I'm just gonna show you points in the charts where trades could have been taken. This is the 15-minute time frame. Now this is a closer look at the price action where I've marked out all the levels that were important to me. This box here, this yellow box, is not indicating session times. The session times are indicated with the light gray box. The no trade zones are indicated with a light purple color type of box. And then these yellow boxes indicate a consolidation where I have at least 4 candles inside the range of this huge big candle. So a minimum of 4 inside candles would indicate a consolidation where a break through the ranges qualifies as a break of structure. So now what we have here is price action through Asian session. I only trade the London and the New York session. This here is the consolidation on the 15-minute time frame. This consolidation right here. The reason why this is a green line and this is a red line is because once price breaks through here, I'm going to need a fresh set of buys. I'm going to need a fresh set of buy signals like 5 to 6 to enter buys. And if price breaks above here, I'm going to need a fresh set of 5 or 6 confirmations to enter sells. So we have these notes here. Feel free to pause the video and go through them, but also let's just go through them together. So what we have here is that we have multiple pin hammers. We have price doing a whole fake out in the form of a W pattern or multiple troughs and a W pattern in itself. And then we have price reacting off of this quarter level and then this candle closing above the 20 EMA at the same time completing the fake out. So I have more than enough to enter buys, but because the first take profit would be this 5-minute order block, the risk to reward is less than 1, so I won't enter any trades, but the bullish bias has been confirmed. So now here we have a fake out M pattern at a 50s level and a 3 candle pattern in the form of 4 candles. And then here we have a sweep M pattern also in the 5-minute order block area. So now we have a completion of the candlestick requirements for sells. So I'm going to wait for price to close below the 20 EMA for it to be a confirmed sell. And here we have price closing below the 20 EMA. First take profit is this order block here. Here we have price doing a fake out at this red line. With every fake out is a W pattern. This happens to be a 3 candle pattern formed by 4 candles reacting off of this order block. Price goes up, comes back down, then does a sweep at this level as well, completes a W pattern, confirms buys. With the bigger picture, we see a head and shoulders pattern forming here. This is the wider view or the bigger picture of gold. These arrows point to the nodes from the previous slide. I left them out because I didn't want the chart to be clustered. Now we have price action leading into New York session. We have a fake out here. With every fake out is an M pattern, and these are multiple tops. That's another indication of price going to the downside. So we have 3 confirmations so far. We have multiple pin hammers, a 3 candle pattern here, and another 3 candle pattern here. So we have more than enough in regards to candlestick patterns for sells. Now we just have to wait for the completion of the fake out right here. Price is already closed below the 20 EMA. Buying, rather, no. Selling at this point in time wouldn't be favorable because the first take profit would be this order block here. So on the pullback, we have a better risk to reward. And now we have price just going through this level because of this high impact news. It's up to you if you want to enter a trade right before high impact news, but that depends on your experience and your risk tolerance because price could have easily shot up and then continued going down. This is a wider picture of the chart. We have now price confirming buys, but because this risk to reward is less than 1, with the take profit being this level right here, I would advise to wait for a pullback or further confirmation for buys to the upside. What we see here is very similar to what we saw on Euro USD, but with a slight variation. We have a W pattern at yesterday's high of the day. Since buys have been confirmed, all I need is a W pattern or a 3 candle pattern at a significant level to enter buys. So an entry would be here. Another entry would be here, mainly because this W pattern is a peak formation low, followed by a consolidation right here, and this breakout candle that also engulfs this whole consolidation. Even though there is resistance up ahead, this price action, this pattern right here, indicates at least a one-to-one risk to reward potential. Looking at the bigger picture, now we see that price indeed went up, giving slightly more than a one-to-one risk to reward. This price action here is very similar to this price action right here. As you can see, peak formation low, but this is a V bottom, consolidation after peak formation low, engulfment, this big bullish candle closing above the consolidation and giving us at least a one-to-one risk to reward. Now this brings me to the end of my video. I hope you enjoyed it. Take from that what you will, and I'll catch you on the next one. Cheers.